You're locked in to the Cash Flow Show with Dave and Nate, the best place to navigate how to achieve capital appreciation with commercial acquisitions. Here's your hosts, Dave SEYMOUR and Nathan Amaral.
And we're here.
It's funny, dude. It's like now with that new feature, we're having chats while the video's playing, and we just got to be careful that
we're not saying anything.
PC.
Yeah, PC, PG.
No, I don't give a shite about. Just want to make sure I'm PC. Come on now, you can do better than that.
That's true.
Amaral.
We've been busy. We've been busy these past few weeks.
Where you been, dude? I feel like I feel bad. Like,
why?
We haven't been delivering. You know what I'm saying?
I know that the people.
I like to deliver and show up.
The people miss us. The people miss us. I've had a very extraordinary past few weeks, but today I did do my first handicap. By the way.
You did.
What? I did my first.
You rode a horse?
No, I got my golf handicap today.
Oh, that's right. You're a handicapper now. I remember.
Yeah.
That's so good. Look at Tom. No PC with TA. No, come on now. It's all good, Tom Angelucci. Tommy don't mind. He's a good guy. So you got a handicap. What are you, like a 4?
So get this, right? Get this. So we have to submit like so many cards, whatever. I submitted my registration to the federation, and today we had 1 hour and we did 9 holes in 1 hour. Like, that was insane. It was just way too fast. It was like, He's like, no, it's your first card. Don't worry about it. And I'm like, I don't know. I've never done this before. So we're like, like, go. Like, we did it in like,
get up there and swing it.
We did it in like 70 minutes. It's more like 70 minutes, but it was way too fast.
What'd you shoot for 9 holes?
So this is the thing. When we got back to the clubhouse, I didn't even look at my scorecard. He ran it inside, and he went to his next appointment because he's a golf coach. And I didn't even think about looking at it. I was just like, man, I'm so tired. I'm going to go shower. So I honestly don't even know.
Were you under par? Were you par?
No, I was over on everything. Yeah, I was over. Like,
So you suck, just like It's so good. Awesome.
Oh my God. But you played some golf. By the way, do we have any golf pros watching us or in our audience? Let us know in the comments. I'm just curious.
I got a client. He's not a golf pro, but he's a professional jockey. How about that? Yeah.
That is interesting.
Professional jockey.
Yeah.
Millions of dollars in winnings. He's
wow.
also a multi-family investor.
Wow.
I had a call with him actually when I was down at your mastermind in Florida.
Oh, nice. That's him? Oh, cool.
Touch gloves with him. That was that call that I had to take upstairs in the middle of your event there.
Nice.
But golfers, jockeys. I actually did a really cool interview this week. For those of you that follow us regularly, I have a radio show that records here in Boston. It's called Real Estate Revealed. I think you can actually find it as a podcast as well, Nate. Like you guys have been turning that over.
Absolutely.
But, talking about professional sports and stuff, I interviewed Michael Neal and his younger brother, Ryan Neal. Mm-hmm. Ryan Neal plays for the Seattle Seahawks. Boo. And Mike Neal, his brother, retired from the Green Bay Packers. And just a couple of guys, really good interview, talking business, talking, mindset around professional sports. Just cool stuff. Good interview, a good conversation. I've got a call this week coming up as well with a ex-Olympic athlete, young lady by the name of... I'm not going to spoil it now. You'll have to listen to the show. So anyway,
all right.
It's good. It's good stuff going on.
Oh, wait.
Debbie, you can't hear me? I got the right microphone.
No, maybe Debbie. Maybe you try. Oh, she can't hear Dave. Debbie, if you can't hear Dave, maybe you just try resetting it. I don't know what's going on in the airwaves today, but everything looks fine on my side. Hey, if you're watching us now, I know if you can hear Dave, put yes in the comments.
Check 1, 2, 3, 4, 5.
Oh, you know what it is?
Dave SEYMOUR.
I don't think your microphone is on today.
No, it's on. I looked at the red
You
button,
did?
and when we jumped on this silly thing, it said Yeti microphone. So I know it's coming through.
It must be coming
I can
through.
see my own voice going up in the green.
Oh,
right
if you
there.
see, oh, look, Tom is saying, yeah, yeah, we can hear you, Dave. They can hear you.
All right, Tom. All right, Tom.
We got it.
What it is.
All
You
right,
know
so
what it is? She's just listening to you and ignoring me.
that's
what it
probably,
is.
maybe that's what it is.
It's like all the women in my life. They all ignore me. It's okay. It's okay. All right. So now you got a handicrapper.
Yeah.
You're beginning to be a real golfer. Did I tell you? I think I already shared this with you, but I
What?
found out something my last trip down in Florida.
What's that?
My business partner, our chief investment officer, Walter.
Yeah, Walter.
Did
Yeah.
I already tell you this?
I don't think
Walter
so.
Nowicki? He qualified a few years ago for the senior tour. That's how good he is.
Wow. That is good.
Yeah.
Does he still golf? Does he still do it or?
No, he hasn't played in a couple of years. But the thing is he dropped it in a conversation.
Yeah.
And then he said, "Now I'm not going to make any money when we go out and play because I'm a player."
Exactly.
He was going to skunk me, man. He was going to do a little sneaky thing right there. But anyway.
Good stuff.
Good stuff.
So what kind of, yeah.
Well, go ahead.
Well, we got a few things. I mean, I just personally want to like jump right in because we haven't met in a few weeks. So I'm curious about all the new deals that have been happening, but also the title of the show today is Build It and They Will Build Them and They Will Come. So what are we talking about? What are we building?
Yeah, here's what we're talking about. It's kind of like the, Field of Dreams mentality right now. Supply and demand. Build it and they will come. Supply it because there's a demand to be there. And we did a deep dive the past couple of weeks. First of all, where have we been? We just finished a raise for our 81 unit complex. Congratulations if you're one of our investors on there.
Congratulations. Well done.
Congrats. We're closing. Yeah, we're closing next week. It's a $3 million raise. Kind of crazy to watch that oversubscribe in such a short amount of time.
Yeah.
But it's also interesting because, I knew this in raising capital. If you raise 6 million, you're only going to get 3 million. If you raise 3 million, you're only going to get 1.5. Which is hard for me because if I say I'm going to do something, I do it.
Yeah.
And to be in that position where, we were oversubscribed. I'm incredibly grateful. The deal that we just finished putting together there, the 81 units in Orlando. We've been holding that deal for quite a while. I think I shared before we had some challenges in the due diligence period. All that's been rectified now. But we underwrote the deal at a 7 cap, and the market trade right now is probably anywhere between 6 to 5.5. Okay. So we're already working with pretty substantial margins before we do a darn thing to the property, which is exciting. I'm really bullish on that deal. So for those of you who got in, you got in a fantastic deal as far as I'm concerned. Those of you that didn't get in on that one, we've got 2 more properties that are in contract right now. I'm going to share those with you in a little bit. It's all about that supply and demand piece. So we pulled some numbers on multifamily demand and migration and tenancy. It's the second page of that PDF. If you want to pull that up, I'll just run through some of these numbers. It's pretty amazing when you start looking at the data to support what it is that we do.
That's not it.
Can you pull up that second page?
I believe.
It says high-level trends fueling multifamily demand.
I can. Oh, we're having technical difficulties today.
Oh boy, that's the first page. So I know you can pull up the second page.
There we go.
PDF.
There we go.
There you go. Now show me the next page.
All right.
There
we go.
There you go. Right there. That's the page. So let's take a look at some of these numbers. This is pretty interesting. So millennials, right? We know who they are. That's my son Robert and all of his friends. Love them, don't love them, whatever your feeling is. They're still not moving towards home ownership.
I'm a millennial.
They're not inspired.
I'm a millennial.
No, you're not.
Yes, I am.
How old are you?
I'm a millennial. Yes, I am. I was born in 85. I'm a millennial. Yeah, that's why. Why do you think
I'm still not old enough to be your daddy. I was 66.
No.
I'd like to be your daddy.
Wait, how old are you? You're not 66. You're 56.
I was born in 60. I was born in 66.
Yeah. I was going to say, there's no way.
I'm 54. So anyway,
Yeah.
look, the millennials.
Yeah.
Some of the statistics around that age group are pretty insightful. Student debt is choking them out.
Yep.
They're still not inspired to, en masse. The majority is not inspired towards home ownership. And it creates a huge demand for that rental. I think about Robert, right? 26 years old, lives with his girlfriend over in Salem, Mass, and rents. And he's such a microcosm of the macro age group, because I said to him, dude, we got get capital. Come on, let's buy some real estate.
Yeah.
He's like, Dad, I don't want to be tied down. He said, I work from home now. She works from home now. He said, we might go live in Colorado for a little while. We might go live in California, Florida, wherever we want to go.
Yeah.
They want to go.
So true.
So it's such an interesting phenomenon. And then we start coupling that with the migration of COVID, etc. So anyway, new renter households increased by 10 million over the past 10 years. So approximately, they projected, beautiful, there you go, make it bigger, baby, you got it. So they're projecting 1 million new renters per year is what their expectations are. So estimated 500,000 new rental households per year through 2025, right? However, there's only 300,000 new units built in the past 3 years. So there's a deficit. There's a deficit anywhere between 150,000 to 200,000 rental units that are in demand.
Wow.
Okay, in demand. So what does that tell us? It tells us that multifamily investing in any area is high on the demand side. This is interesting. Single population is growing. Rose by 15 million above married couples over the past 10 years. So home ownership ain't cool. Getting married ain't cool. What are you millennials doing?
What are you guys doing?
You evil children.
But listen, I'm right up there. Listen, Dave, I've told people this so many times. I own more properties that I don't live in. It's the truth. I own properties that I don't even live in, don't want to live in. Why? Because I like this remote lifestyle. I like to be jumping here, jumping there. I want to go live here for a little bit. Want to live over there for a little bit.
You've done it, man. You've gone from, Fall River to Africa.
Yeah.
From Africa to you've been everywhere. You bring
but I don't want
to live in the Azores.
But I don't want to stop though. My next stop is Thailand and Malaysia and Singapore, Florida.
What are you laughing for? Florida's sexy. It doesn't have to be international.
It is. No, but I'm done with America though. I've already been all over the United States. I'm done with the U.S. Where did I not go? Montana.
I'm done with the U.S.
Not like that.
At all.
Well.
Can we get back to real estate?
Yes, let's get back.
Baby boomers.
Yeah, baby boomers. Yeah.
Baby boomers. I'm just a baby boomer. I was born in '66, right?
Yeah.
So I think baby boomers started in '65. So I'm only just right there. So baby boomers are now representing the second largest demographic. This is the first time ever. So there's less of us. However, they're still looking to downsize. Urban apartments. They like the idea and the flexibility of renting houses and apartments and being in nice communities. So look, all of this data is pointing to the supply and demand. Build them and they will come.
Yeah.
The immigrant community in the United States of America is not financially, set most of the time to be able to get home ownership. And yet the immigration rate in our country continues to rise. And I'm not doing the political thing about legal and illegal immigration. But, we have. Well,
no, I was just thinking. I was like, yeah, it's increasing. Have you checked the border recently? It just keeps increasing.
Yeah, I mean, look, that's a whole other discussion for a different podcast.
Yeah.
Topic.
Yeah.
But the tight construction labor market is constricting constricting the construction. So I don't know, man. I thought it was interesting. You can pull that down if you want, Nate.
Okay.
You don't have to keep that one up there.
Right.
But when we're looking at the combination of those kinds of statistics in tandem with the amount of movement that we've seen and continue to see through through COVID, it makes me sleep well at night as a custodian of our investors' capital, because I keep on getting reinforced over and over and over again. Right place, right time. So,
well, you bring up a good point about the sleeping better at night, right? I was just talking to a woman earlier this week, and interesting enough, she had lost her job during COVID, right? And she said, "Well, I really want to be in real estate." Her and her husband, they liquidated their 401k, and they did buy some units. They bought it themselves, and now they had second thoughts about expanding that and are looking for other alternative solutions, and more of a passive approach, because they're thinking well, what happens if I don't do it right? What happens if I make a mistake? And what happens if I'm not getting the returns I need, right? And so that's when I mentioned, I even brought up the website. I showed her on a screen share, and I said, well, you got to check out Freedom Venture, because this is a passive approach, right? This is where you don't have to worry about it. You have whatever 20 plus years of experience on your side to help you get things done. So some people want that. Some people don't want to go hunting for a deal and working with contractors and making sure they're doing a good job. They just say, hey, I have the capital. It's sitting in my 401k, or it's been in this maybe some type of account, or maybe it's just in a checking or a savings account and not earning anything. And here is a good investment where you can be a passive investor in a multi-unit complex.
Yeah, look, man, it's there's no right or wrong, right? It's left or right.
Mm-hmm.
What is any one individual's DNA, aligned to do? But you got to think about it. 10,000 hours is the average that you need to be an expert at anything. Right?
Mm-hmm. Mm-hmm.
You said 20 years. That 20 years is actually 25 years in just one market, and then combined between the GP, the operators of the company, there's north of 50 years worth of experience in commercial real estate. And I look back at that and I think to myself, all of the mistakes that we've already made that people don't have to pay for, right? Again, no right or wrong. If you want to be the individual who's exposed in business, then it's okay to be the owner and the operator, the insurances, the exposure, the process. Do you understand all of tenant law by state? Do you understand construction from ground up to repair? How are you doing with all the building codes in the state that you're investing in? Are you compliant? Do you have lead paint violations? Do you have asbestos violations? Do you have mold issues, as we've dealt with in the Florida market, right?
Mm-hmm.
Can your building supply a clean bill of health? How are you doing on your ESG standards? What are you doing with regard to green building and green structure and environmentally safe and sound communities? What are you doing to build a good solid tenant base, where the communication between tenants is loaded with positivity, not negativity? How's your marketing team? How's your property management team? Once you buy the asset and you turn it over, how are you doing with regard to putting the capital stack together?
Yeah.
Are you using Freddie and Fannie first lien position? Are you doing mezz financing? Are you putting some bridge in there? Are you using private equity? If you're using private equity, are you using it according to the Securities and Exchange Commission rules and regulations of pooling capital? Do you have a pre-established relationship with your investors? Are you a 506C, Reg D? Are you a Reg A? What kind of fund are you running? Because if you can't, you see what I'm saying, man?
Yeah.
Hours and hours and hours and hours. All right, overwhelmed.
Yeah.
And look, I don't say that to be a smart ass. I say it to educate.
Right. There's a lot in place there.
Look, it's a decision. A cool story. Gentleman came in on the 81 units with us this week, and he heard me on a podcast. Real cool guy, originally from New York, now lived out in Utah. In New York, he was in construction, Went out to Utah, continued in construction, but high net worth guy, exited out of one business, real good. And it was funny. He said to me, he said, I reached out to you after hearing you on this other guy's podcast. He said, because I really resonated with the simplicity of how you delivered the deal. He said, I resonated with the ground up mentality in the sense of myself and Walter. Both started, with a construction background and moved into investments and taking care of other people's money. He's done $250 million worth of transactions in Florida. I probably got, I don't know, 50, 60 million, if not more, of transactions underneath my belt over the years. And he said, I resonated with you. He said, I like the simplicity of it. And then it was funny because he said to me, I was pretty amazed that I could actually get you on the phone. Yeah. And I just said to this guy, I said, John, I'm a custodian and a steward of your capital, brother. Does the deal make sense? Do you like the company? Because you invest in with us rather than on a deal-by-deal basis. You're really investing with us as the operators of that transaction. I want to keep it simple. What we do is not simple, but how we do it is proven, duplicatable. We've got a couple of projects that we're looking at right now. Not the ones that are under contract, but a couple on the horizon. We're pretty excited about what we're going to be launching in the next 4 to 6 weeks. We think absolutely a huge necessity in our field. So I'm excited to do a little bit of a reveal on that one. Actually, it could very well be a national reveal rather than a local reveal. So
what is the difference, though? What do you mean by that?
Well, what we're about to embark upon is we'll get national recognition. Although we're primarily in the Florida market, the strategy that we're anticipating deploying is it's very unique. It solves a lot of issues. Because think about it, man. It goes all the way back to day one. What do? We're real estate solutions providers. Remember that line that they gave us in training day one? Right? So if there's a solution that intimates that there's a problem. So that's what we do. We identify problems, and those statistics I gave you are a problem, right? They're a problem. So we got some resolution to that stuff. Let's talk about, if you can you pull up the 2 deals that we're about to close on? Yeah. So we're closing next week on the 81 units. Okay. But I got two more deals that are going to close on by the end of Q2. So
which one do you want me to show first? I have 2 here.
Why don't you show the 30 unit one? That's a cool little deal.
Okay, let's do that one first.
That's a cool little deal. So this property here, we may very well have done a deal of the week on this one in the past. This one is it's reached its point of fruition now. Gone through some underwriting, gone through due diligence. Price has been negotiated. It's under contract. So we're excited to bring this one in. So the point of this is, build them and they will come. Well, we're buying like crazy. Right? We're buying on the right premise. The right numbers. So this is 30 units inside a larger complex of condominiums. Okay. We can take down all 30 of these, which we will do. We've got a nice business plan in place for this project to do some really nice exterior work to give that tenant who wants some green space, pet friendly. It's more, instead of like an apartment complex, it feels more like a beautiful condo complex, if you will. So this one here, the acquisition on it, we actually negotiated it down from that 6.6. I think we're coming in at about 6.2. We bumped up the capex on it to $85,000. But all things considered on it, the deal value doesn't really change that much for our investors coming in. So increasing the rental income in the first year will give us an estimated $1.8 million in valuation, additional valuation based on the cap rate. The cap rates are shrinking in these markets, which means they're more valuable. So that's a great deal. So that one's coming in, market value on that. We're buying it for 6.6 plus that 6.2, plus the capex 6.3. True market value on that is probably around 7.7 to 8. So that's $8 million there. There's another 8 million in the 81 unit, so that's 16. And then there's another 8-unit complex that we're going to take down in the next few weeks as well, and that one will bump us up to approximately about 20 million in assets under management that we're going to take down just in this 1 quarter alone. So it's a pretty exciting time. The numbers on that one, as you could see, no worries, Nate, if you didn't stay up on the slide there. This is a smaller 8-unit property. It's okay. It's a smaller 8-unit property in the Tampa MSA. This is a great little deal. I don't need to go through it too much. It's in the right neighborhood. This has been part of a family dispute, for want of a better term. And this one here, if you scroll down, I think there's some highlighted projections on this one as well.
Yeah.
So on this one here, again, it's a nice multiple, 2.37, targeted out. Cash on cash returns are very strong on this one as well.
So to make something clear here, we're seeing two numbers I just want clarity on. We're seeing one at a 1 year at 12%, right? And then a 5 year at a 15%. So are you saying in these numbers, like you're going to hold for sure for 5 years, or how does that work?
No, great question. So depending on where this one goes, it may very well go into the fund. If this one goes into the fund with the other assets, then it'll be a 5 to 7 year hold. But you got to remember, the fund is a blend of assets inside of it.
Right.
This one is, even though it's a smaller asset count, it's a nice little pop in the numbers, if you will. So that 15.7 is the annual targeted return over the year into year 5. But the internal rate of return, the value of the money working over that 5 year period, as you can see, is north of 21 targeted. But the multiple is always the easier number to focus in on.
Okay.
So we're saying for 100,000 in on this deal, for example, when the deal sells out and is disposed of at the end of its life or the end of the investment, the investor gets their 100,000 back, and in this example, cash flow plus profits at time of sale gives them an additional 137,000. So more than doubles their money over that period of time.
Okay.
So you can pull off of that screen as well.
Yeah.
So
Tom has a question though. Tom's got a question. He says, after all due diligence, how long does this process take? Ideally, what is the time frame to bring a project like this to fruition?
Yeah, great question, Tom. So we underwrite for maybe a week. If it gets through underwriting, then it gets into negotiation. That can take 4 weeks. Once we've settled on a price on the property, we look for anywhere between 60 to 90 days for our due diligence period. So 60 to 90 days on due diligence is actually the market's getting real aggressive, and we're needed to shrink that down. Not a bad problem to have because we can move fast enough. So I go through due diligence. I then get to the closing table. Depending on the extensiveness of the capital improvements, 8 units, for example, we'll turn that in a month. That'll be up and running and performing very, very quickly because of the size of it.
Yeah.
The 81 units, that'll take us 90 to 120 days on capital improvements, and then maybe another 90 days, I would say, to reposition tenancy on something like that. So each property's it's got its own business plan, Tom, but that's pretty much the standard timeline for most of this stuff. Again, depending on the capital improvements. If it's a full value add or opportunistic deal, then there's probably no cash flow on the asset 12 to 18 months. If we're doing a massive overhaul of the property, so each one's a case by case basis to bring them to their most financial point, for whatever you want to call it, financial, to make it hum, make the building hum is the term we use. Yeah, good stuff.
All right, that is good stuff.
The last bit of exciting news that I have
drum roll. Do we have a drum roll?
Drum roll. So kind of interesting. We've aligned ourselves with a trust company that's coming out of the Midwest, and we went through a pretty extensive due diligence period with them.
South Dakota?
No,
Okay.
no, I can't. I'm just gonna go Midwest and leave it at that.
Okay. Just
Um,
curious.
uh, yeah, it's interesting, man. We're getting recognized. Damon John said this
Nice.
one time to me.
Yeah.
He said, always, always, always make sure your optics are right. He said, because you never know when the big boys are watching.
That's so true.
And it's interesting. We've got enough traction, enough noise, enough track record that we're getting noticed. And this trust company out of the Midwest put us through some underwriting. I'm going out there in a couple of weeks to meet with the rest of the team out there. But the good news is they allocated $1 billion with a B in capital Q1 for commercial real estate,
Wow.
specifically multifamily. I would love to tell you they said we could have all of it. That's not true.
What are they?
But,
just out of curiosity, though, what are they transitioning out of? Like you're saying, they're going into multifamily.
They're not. They have 40+ billion in assets under management now.
Wow.
But none of it is real estate.
What?
And they know. Yeah. What? And they know that commercial real estate is the next move.
Man,
like they're just
I must say.
So anyway, they gave us 225 million.
That's awesome.
To play with in Q1. Yeah.
That's awesome. I've never seen you in a room with this offering. I'm going to use the word offering.
Yeah.
That would be so interesting to see some point, man, because it's just a whole different.
You know what? Yeah.
Like I'm thinking about your structure and your clothes. It's running through my mind.
Yeah. You know what it is? They're just people, dude.
Oh, true. Yes, but
people, man.
yes,
no, I get you.
But the positioning, but the positioning is. I'm sure your first time you walked in there, you told them, 343. Just joking. No, I'm just saying, like, there's a different positioning in that conversation, and you have to draw the curtain on the old script and transition into a new script and a new presentation, and that conversation is very different. And so anyway, I just think about
that's insightful, dude. It is. And you know what it is? You end up assimilating. Right?
Mm-hmm.
You're the common denominator of the 5 people you hang around with the most.
Yeah.
So I have not been spending, and this is no disrespect to anybody, I haven't been spending my time in a single family place.
Yeah.
I haven't been spending my time in, bullshit in a box for $1,000 education space. You know what I mean?
Yeah.
I'm not telling people to go wholesale houses because that's the easiest way to make $5,000. That world is gone.
Yeah.
I've grown up.
Right.
And again, I don't mean that in a disrespect. I'm playing in a different.
But listen, it's like, I mean, if you look at it like a gym, you're now, what do they call that? That's not bench pressing, is it? Pull-ups? Benching, yeah.
You know what I'm doing? I'm driving the fairway about 380 yards right now.
There you go. You're driving. Let's.
You slice it into the woods.
I only did that twice today. Exactly. That's the best way to put it.
Yeah, it's definitely a different conversation. And you know what's crazy? They want me there.
Yeah.
They fly me there.
Of course.
They take care of me when I get there because
heck yeah.
They've got the money, but they can't spend it. They can't find what we had, right? Build them and they will come.
Right.
So it's an exciting time for us at Freedom Venture. It's a good time to get involved with us as well.
It is good times.
Coming in early in the process, yeah.
That is all great. That's all good news, man. Exciting news for sure. Congratulations. That is awesome news. Good stuff. All right. Well, thanks everybody for joining in and sharing your questions and comments. And by the way, if you ever have any more questions or comments or want to get involved, you can get over to freedomventure.com and get on the phone with Dave's team or Dave himself, maybe.
781-922-4418.
That's the number. Give him a call. All right, everybody. Thanks so much, and we'll catch you next week. See ya.